Welcome back. Well, the market is holding okay. In fact, in the last few minutes, Vodafone Idea has managed to perk up a bit. Home First Finance is doing quite okay in the last few minutes, so just watching out for that. Even though it is granules that continues to be under pressure, but it's again off the lowest point of the trading session. So on some of these names like Vodafone Idea, Home First Finance, as well as Granules India, there is a bit of a perk up that has happened from the lowest point of the trading session. Sachin Shah joins us now. He's of course joining us from MK Investment Managers as well. Sachin, hi, good to be speaking with you. Thanks so much for making time and speaking with us. First up, the market view itself, because of course, while a lot of people have been saying that we are toppish and the fundamentals perhaps are getting overshadowed by liquidity right now, what's your view on where the market momentum lies and what should we factor in for the market peak?
Yeah, hi. Thank you for having me on the show. Always a pleasure. Yeah, so I think it's getting kind of a consensus view that the valuations are getting a bit stretched, at least in some pockets of the market, particularly the small caps and mid cap, those kind of things, and of course the large caps are much more reasonably valued. I think this is a fairly general consensus view, but I think what is also important to observe is that we are seeing a lot of macro positives which are playing out for India. Say, for example, in the last 10, 15 days, we've seen oil prices coming off quite a bit. It's almost down by more than 10%. We are now in the range of 70 odd dollars, much below the $80, right? So I think that's one very big positive for a country like India. I think the other thing is also in terms of the inflation kind of now being under control, not only in India but in the domestic markets. So clearly, we are going to see cooling off of the interest rates and the benefit of that playing out over the next few quarters. Of course, structurally, we may see a higher interest rates compared to our, the history or the past, but still they should be significantly lower from what they are today, at least by at least 100 to 150 bips or maybe closer to 200 bips lower. I think that all of this also needs to be factored in because all of this will also generate a good demand with prices cooling off and also better margins for manufacturing companies.
Definitely, the low oil prices will benefit the country. But sector specific, if you look at IT is one sector that has been buzzing for a last month or so. It's one of the top gainers in the last 1 month. How are you reading into the fact that the rate cut in US will be benefiting the BFSI spending? How will that overall benefit the IT sector? How are you reading into that?
Sure, thanks. So if I can recollect last time that I spoke to you guys, or at least the last couple of times that I would have spoken to you guys, we did discuss on this, and I was probably mentioning that IT as a sector is a bit underowned. At the same time, we are seeing the headwinds converting into tailwinds because the hard landing that most of the US corporates were expecting, and because of which they were all holding to that war chest in terms of their cash holdings. I think as they all realize that this hard landing is not happening, the job market still continues to be reasonable. And of course, BFSI is a very large sector for IT companies. They are one of the largest customers even today over the last 20 years. They still would be about 30 odd percent depending on company to company. But so I think the tailwinds are here. Coming. I mean, they're on our way. So I think IT as a sector should do reasonably okay because the valuations were also fairly low about maybe 3 months, 4 months back. Even today, I wouldn't say that they are a very frothy valuations, at least in the large IT companies. So that's the trade that we are seeing at this point in time in the markets. And my sense is that IT as a overall should do well. It is one of the large weights in the indices. Like for example, I think in Nifty also it is nearly 14-15% weight. So if it does well, it helps the overall markets also.
Okay, so that's the latest coming in as far as the IT sector is concerned. But what's the view coming in on auto? Because yesterday, of course, Tata Motors was down and there was this entire worry about the increased discounting, increased inventory, etc. But now at least a government push coming in towards part of the e-vehicles. What's your take on autos? Has it topped or do you see further steam? And within autos as well, which are the ones which stand to benefit more versus the rest?
I think in auto, what we are seeing over the last 3, 4 years now, I think it's, of course, first is that auto as a space secularly should do very well because of the demographics and all of that. But I think the most important the thing that we need to focus is on the autos is in terms of the premiumization, right? You may see, even if you see the financial year 24 or even in the first few months of FY 25, the trend is very clear in terms of premiumization, both in passenger vehicles and two-wheelers, because you may not see too much of volume growth, but when you see the value growth in terms of the revenue growth for most of the companies, it has been very strong. Not only that, if you look at the gross profit growth, if you look at the operating margin growth or operating profit growth, is far higher than even the gross profit. So clearly, there's a premiumization story which is playing out in auto. And I think that's the story in many of the other categories in terms of the consumption side, which we believe will continue because we are a young, aspirational country, and which is what is driving this premiumization. So I think it's a far more secular story, and there will always be some cyclical blips that we are seeing in the current situation with some inventory pile up in the passenger vehicles and those kind of things. But we are extremely positive overall. Secondly, I think another very important part about the auto we all have to focus is also on the auto ancillary space, because there, exports as a story is also very large story, and now we have, this has been a potential story for the last maybe a decade now. But I think at this point in time, in so many companies, we are seeing where this, potential is actually getting converted into hardcore order book. So today, exports is a very large opportunity, and it seems to be getting capitalized with quite a few companies where this, whether it's China plus one, whether it's Europe plus one, or whether it is the domain expertise that some of our companies have demonstrated to the global customers in terms of the size, scale, and quality. Think all of that is coming into play. So I think over the next 2, 3 years, both the domestic OEs and the auto ancillaries for the export opportunities should do really.
The banking space, where is it that you're seeing more value? Is it the PSU banks or the private banks that are more attractive as per you?
If you see the last 12, 18 months, the PSUs did quite well. And of course, before that, it was private sector, and PSU valuations were very, very depressed. My sense is at this point in time, probably the PSU, the trade which had to play out is probably the gap between the private sector versus the public sector bank seems to have bridged quite a bit. And at this point in time, the valuations for the private sector is extremely reasonable. Of course, there are some headlines in terms of the headwinds for the deposit growth and those kind of things. But I think these are again very typical of any cycle. But if you see some of the large private sector banks, they are very, very strong franchises, and for them to have decent deposit growth, particularly on the CASA side, shouldn't be too much of a challenge here if you do not take a very short term view, and if you take a little longer view of over next 2, 3, 4 years. So our positioning is much more on the private sector space at this point in time in the banking space.
Point taken, Sachin. On that note, we'll let you go. In fact, since we're talking about the private banking space, let me talk about Yes Bank as well. Incremental news flow coming in on Yes Bank, wherein the stake sale seems to have gotten delayed for now. The deal might not happen this financial year. That's what we're picking up from sources, and all of that will come up. Sachin, we'll let you go on that note. Thanks so much for making time and speaking with us. But that is the news flow that we should try and pull up on the screen, because Yes Bank has decided, Yes Bank stake